Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a wedge breakdown here on gold. Now, the candles themselves are actually pretty small, so we're only gunning for pretty much just a scalp on this one. We're not really going to be able to get a whole lot more, but the pattern itself is setting up really nice. Now, the nice thing is, because it is such a small pattern, we're able to go in a little bit heavier with 5 contracts this time instead of our normal, 3 or 4. So looking at the pattern itself, there's a lot of reasons why this looks like a really good wedge breakout. Now, just looking at the overall ranges on gold does make it a little bit of a concern. We know that we're starting to tighten up. We're seeing smaller and smaller ranges. The breakouts of the ranges are typically failing back down into the range. We're having kind of a difficult time getting anywhere on gold right now, but this overall pattern, we've got this low that we've pretty much just been kind of meandering our way up to the top side. And early this morning, this high happened back at 5 o'clock this morning. We pierced this high up here and created those highs and then immediately rejected back down. Kind of had a small channel working through here. Broke out, test, moved back up to a new high, and then started basically working our way up, making a new channel to the upside again. But as soon as we tagged this area up here, these highs, you can see no closes outside of it, just all wick. And every single time we've come into that area, we've completely rejected that location. So you could have definitely hopped in a couple short trades from up here. The more conservative way, and that's why I'm taking this trade, is waiting for this wedge to actually break out first, then take a pullback, and then drive it a little bit lower down. So what we're seeing here is we finally broke out of this wedge, came back up, tested it, and now we're finally starting to see the sellers come in and reject this price a little bit further down now after having a firm rejection of these highs here. So pretty much now it's just kind of an easy in, out, easy kind of trade. So we're looking at taking 3 contracts off at +5 here at 62.4, and we're short at 62.95 total contracts. And then taking 2 more off as a runner down here at 61.4. Once we get this 62.4, because we're expecting a scalp, it's probably just going to be more of, once we get that first +5, just move the stop to break even and see if it wants to give us that final +10. If we start seeing a lot of volatility come in, we might be able to expand that target down. But from what we're seeing this morning already on gold, I really doubt that we're going to have any type of volatility until maybe this afternoon, but we'll see what it wants to do. So we're in the trade now, and let me place my orders on here so we can see them. So we're short here at 1262.9, 5 contracts, looking to take 3 off 62.4, 2 more at 61.4, and we'll see what we can get out of it. So we'll be back in a couple minutes here, hopefully a couple minutes if it wants to drop, and then we'll see how we do on the trade. All right, so we're edging in on our target here, coming in at +4, so 5. Need one more tick to get that +5 filled, and we'll see if they can get us filled. Once we get that +5, our stop automatically moves to break even for us. So our stop is now at 62.9, and now it's pretty much just kind of a free trade. Now, because of this movement that we're seeing on the market, I really don't necessarily want to move my stop to break even yet. At 62.9, yes, we just took off that first target here at 62.4, and that's good. We just locked in 15 ticks, but at the same time, we're getting a lot of chop and slop here, and we know that we can expect this price to at least fall down to this next low down here, a little bit farther down. So I'm going to opt to be a little bit more aggressive on this trade. If price does break above this, 63.3 to 63.4 area, I'm not interested anymore regardless. But we've got took 3 contracts off at +5. That gives us 15 ticks so far. If we do come up and get stopped out, we're losing 10 ticks. So at least we make $50 on the trade. Cover commission, maybe a little bit extra. But I really, judging from the failures all through the top here, we're expecting a little bit of a steeper fall down from this location back to the lows. So we'll see what it wants to do from here. But again, I'm not really expecting this to pull back much farther. Now, as we creep up on that +10 here, we've got 62.9 coming down to 61.9. I don't know why my target is moved here. 61.9. There we go. 10-tick target at 61.9. Maybe I moved that on accident. But looking at the target here at 61.9, as we're edging into this, now because we've gone, that distance where we're kind of close, we're getting there, we can start to maybe look to lock our stop in a little bit, but we still have to be a little bit cautious coming into these lows. The reason why I like this 10-tick target instead of where it was before is we have this previous low down here that we're ahead of. So even if we do come down and double bottom at that low, we know that we're still, okay in the position, and we've got a little bit of a buffer room from that low there. So we've got our stop locked in here, just above this high here, 63.4. We still are guaranteed at this point $50 on the trade, minus commissions, maybe $20 or so. So not a huge trade if we get stopped out, but expecting this to go a little bit lower. If we can fill the second target here, that's 2 contracts off at plus 10, so it's another 200 on top of the 15 that we already made. So we're looking at sitting on a pretty solid position if we can get that 10-tick target filled. So it looks like it's kind of taking its time here. So we'll be back in a little bit, and we'll see how the trade ends up. All right, we're back. Now, this is the exact example why I didn't really want to move my stop down quite yet. We knew it was going to be a little bit sloppy. And we can see here, it came back up exactly to our point of entry where we would have been stopped out if we were a little more aggressive, and we would have missed out on this fall back down again. Now, it hasn't hit our target yet, so we're definitely not sitting in the profits yet. But now I'm going to move my stop down to 1263 even, just to be, prevent the possibility of a reversal from there. But it turns out we get filled out at the 2 off at 10, so locked in the rest of the target there. But that's kind of the thing that you need to be a little bit cautious of when you're looking on days like this where it's a little bit slower and choppier. You can see around these areas of support and resistance, it just gets kind of chopped up. And if you get in a little bit early like we did here, we're expecting it to do the exact same thing, whip up, up, down, up, down, up, down, up, down, and then, stop all the folks out who actually wanted to get in the position just to watch it rise back up to where they thought it was going to go. And we don't want to get stuck with that. And you can see, broke out, consolidated again. So we knew that, a little bit of consolidation play up and down is probably going to be pretty probable here. And now that's, again, that's why we locked our stop in a little bit more loosely just to prevent that, from getting whipped out. So got the first target off, 3 contracts at plus 5 for 15. So plus 15, and then took 2 more contracts off at 10 for another 20 contracts. So we're looking at $350 on the trade. Not a huge trade by any means, but $350 is definitely nothing to shake a stick at. And on a day like today with, just kind of the back and forth price action we're seeing on gold, I am A-OK taking money to the bank. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. And don't forget to check out our trial at schooloftrade.com. Have a good one. Bye.